In this video, I'm going to show you a really easy but effective way of increasing the accuracy or the winning percentage of a trading strategy. And I'm going to show you back-to-back results showing the original strategy and then with the improvements. Using two separate trading strategies, I'm going to leave the entry conditions or the entry signals the same, but then swap the exit conditions for a different method, which will increase the winning percentage and, in one of the cases, increase the overall net profit too. By making small adjustments to the rules of a strategy, we can almost tailor them to how we want to trade. Maybe you prefer to trade more frequently and take smaller profits but more of them and have a higher winning percentage. Or maybe you just want maximum profit, which might mean taking less trades, holding for much longer, but have a lower winning percentage. We're going to move over to the computer in a second, and I'm going to show you the 4 charts with the 2 strategies that I've prepared for you. I've been watching quite a few other YouTube videos with strategies recently. A lot of them are suggested by you guys, my viewers, and I'm always disappointed because most of them, the guys who are making the video, they show these so-called great strategies and they show you the entries and the exits, but they never actually show you a proper backtest result. They might just cherry pick a few trades. I mean, it might only be 20 or 50 trades, and they've probably gone back and chose them. You can see they've gone back maybe a year or 2 years and picked a period where the strategy was working very well. But what I like to do is, as you know, I program the strategies, and then the computer takes all the trades, whether they're good or bad, and then we get a proper backtest report at the end of it. And I normally test over a considerable amount of years. In this test that you're going to look at, we're going to look at data from 2008 through to the present day, which is around May 2021. So well over 13 years, taking every single trade, no trades being cherry-picked. So let's go and have a look at the computer, and I'll show you how this method works. Regardless of the original exits for the 2 strategies that I'm going to show you, I'm now going to change them to the first profitable close exit. It's an idea that I picked up from Larry Williams, and it's extremely effective. Very, very easy to implement too. All you do is, once you're in the trade, at the end of the trading day or the trading session, which we're going to use 1700 Eastern Standard Time, we have a look whether we're in profit or not. If we're in profit in the trade, then we simply get out on the next bar, which is, for this Forex markets, it's normally immediately. Unless it's a Friday night, then we'd have to get out on the Sunday open. If we're not in profit, then we simply leave the trade open. So for the vast majority of time, we're going to actually exit at a profit. Occasionally, we will be stopped out at our stop loss, but typically with this type of exit, it happens very seldom. The first strategy that we're going to look at is actually one that I've made a video about before, and I've actually created a free PDF outlining all the rules. So if you're looking for extra strategies, then you might want to check that out. I'll put a link up in the corner of this video to the card for the video, and I'll leave the links in the description of this video so you can have a look at the video or download the rules. And then after you've seen this presentation with this modification, you might want to actually apply this modification to the strategy, because that works really well too. And we're going to start by looking at that strategy. We have 2 charts here then. The top one is the original strategy, and then the bottom one is the one with the first profitable close exit applied. And although we're looking at a 10-minute chart of dollar-yen, we typically, if you want to trade this manually, you'd be looking at the daily bars, and it's a day trading strategy. So we get in during the day and then we exit at the end of the session. And we can see by looking at the trades, this short trade here, we can see that we've entered and then we've exited at the end of the session, and the red dotted line shows that that was actually a losing trade. If we look at the chart below where we've got the first profitable close exit, we can see that we didn't close at the end of the day for a small loss like the original one, because we were showing negative profit. So we left the trade open until the next session where we looked and we were in profit. So we took that profit and we exited. And we can see the same with this long trade here, or this one here. We entered long and then we exited at the end of the day for a small loss. But with this one, because we were in a loss at the end of the day, we left it open, left it to run, and then by the end of the next day, we were in profit. This trade at the very end, we were in profit at the end of the day, and we just exited on the original strategy. I timed exit anyway, and it's exactly the same for the first profitable close exit. So let's have a look at the performance report using the two separate exits. So for the original strategy, we've got a net profit of 4.4 million yen. The equity curve is quite nice, I like that. We've got 631 trades. We've got a winning percentage of 51%. Now, this is where we want to improve it with the first profitable close exit. We've got an average trade of almost $7,000. So let's have a look at the modified exit. We've got more net profit, 5.3 million yen. The equity curve is still just as nice. It's very, very nice within the last few years, look. We've got a few less trades, only slightly. Now, the winning percentage, look, has gone up to 60%, so that's a big increase straight away. And the average trade has even gone up now to 8,500 yen, so that's really good. So in this case, not only does the first profitable close exit increase the percent profitable, which was the goal, but it also increases the average trade value and it also increases the net profit. So it's a win-win-win in this situation. Let's move on and have a look at the second strategy. This next strategy on Euro Pound, we're looking at a 1440 minute or just a daily chart, and all we're doing is we're looking at the lowest low over the last 20 bars, and if there's a break below that, then we simply buy on the open of the next bar. The overall strategy isn't so much important here as what the modification does for us. So you can see straight away on the chart, we've got many more trades using that first profitable close exit. In the original strategy, I must mention actually that the original exit was either a stop loss or it exited at a break of a 20-day new high. So let's look at the performance report. We're making £21,000. Got 71 trades. Percent profitable is still pretty good with the original strategy at 69%. Average trade of £305, that's quite large. Largest losing trade at 3,000, that's our 300 pip fixed stop loss. Look at the equity curve, and the equity curve is a little bit choppy, but it's certainly moving in the right direction. So let's compare that to the modified strategy with what looks like many more trades. So net profit is actually slightly less now, at only £16,000. The equity curve, disregarding this strong period here, it is still moving in the right direction. It's a little bit choppy, but it is still definitely going up. We've got more trades now. We've got over double the trades, 169 trades. But here's the one. Look at the percent profitable. We've got 87% win rate now. That's a very, very good win rate. So the first profitable close has definitely done its job with this strategy. And the average trade is much less. It's only about a third of what it was at £99, but still usable. The largest losing trade stays the same at a stop loss of 300 pips. So in the case of this strategy, the new exit makes less net profit because the trades are held for a less amount of time, therefore having a smaller average trade value. But the winning percentage is much higher and we take far more trades. I hope you're enjoying the study of these strategies, and if you are, then please do me a favour and hit the thumbs up button now. So we've seen that using the first profitable close type exit, what we're doing is we're grabbing our profit at the end of the day and cutting the trade. We've seen that at least it improves the winning percentage quite significantly, and in some cases it can increase the net profit and the average trade value or the quality of the trade too. I've applied this strategy to many of my own strategies and it works really, really consistently, and I encourage you to test it out on your own strategies. If there's any strategies of your own, or maybe mine, maybe previous videos of mine that you'd like me to apply this to and create a backtest report, show you the results, then let me know in the comments or email me, and maybe that can be the content of a future video. Don't forget that you can get the original rules to this first strategy in this video in the links down below, or by watching the video that I've linked, and then maybe apply this modification to the exit too. So I hope you get some use out of what I've shown you today, and until the next one, this is Jared Goodwin, and thank you.